Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's March 19th. And welcome to spring. And today will be the first day of spring, and also happy Persian New Year to our Persian friends out there. So let's kind of start off here. We got the economic news releases for this morning, and just one item here, and that's the Home Builders Index for March. We had 28 last month. They thought it would go up a little bit, but it remained at 28. So these are at five-year highs. So this is actually pretty decent. So we're seeing some strength in the housing area as we've been kind of seeing in the last couple of months. And we do got a few more housing numbers later this week as well. That's all we have for economic news releases scheduled for today. And it's actually kind of a light day today. So what we have here, we have a little bit of mixed on the stock market so far this morning. It's been trading kind of lightly, so it's kind of dipped slightly negative and it'll come back a positive. So they're kind of a little bit mixed today. And then only other really note today, really on the headline news, is one of the Fed members was speaking. Dudley, he's out of the New York Fed Reserve, and basically just gave a speech to a local group over there in New York, and basically told them that we're now out of the woods. We do show some signs of economic improvement, but they want to kind of see it in a sustained level that's able. It's not just kind of a spike and then it's going to go away. He wants to see kind of being able to show these numbers over an extended period of time before they make any decisions to say, okay, we're good to go, because there's a lot of other exterior things that could derail us from our economic recovery. One being right now, of course, is oil with the gas prices, which cuts into the consumers' discretionary money. So when they're spending more money on gasoline, they have less money to spend elsewhere, maybe at the other stores, and go or do other things. So that's playing a big part. Also, things tend to pop up in Europe. When you it seems to quiet down, and next thing you know, there's something else pops up in Europe. So those are a couple of factors that could play into that could disrupt any growth we may show. So that's why he's saying this is kind of wait and watch, see what happens. So let's see from now that where the bond market is moving and what interest rates are doing today. As we saw, we had a little bit of a rally last week. We started the day off way down quite a bit, but we went up, so that's green. And then today we actually started higher today, so rates would have improved, but since then they pulled back quite a bit, and now we're kind of about in the range where we left off last Friday. So rates are probably about the same as where we left off, but it looks like it could be showing a trend to close that gap as we talked about. This gap we left off last week. So at some point, maybe it's not going to be easy. This is a pretty strong ceiling of resistance here. But if we can get above that, we could close this gap. Most likely we may not get above 103, but if we do, then we'll be pretty fortunate. But in the immediate time, it looks like we could be showing some signs of maybe closing this gap up here. All right, folks, so rates are about the same as we left off on Friday. You guys have a wonderful day, and I will see you tomorrow. If you're, please subscribe at the Mike'sDailyMarketReport.com, or stop on by the YouTube and become a subscriber and get your free daily updates sent to you. Take care.